Hey and welcome back. Today I have a new topic for you, and it's something that I use in my daily trading as well. It's a very nice way to generate trading signals, and it's the Bollinger Band squeeze and also the Bollinger Band exhaustion, because they always or often happen together in one signal. So first of all, you can see I set my Bollinger Bands to 2.5 standard deviations, which means that they are a little bit further away from each other compared to the regular standard 2.0 standard deviation. And I find that it gives me much better trading signals. Although the trading signals happen less frequently, they are more meaningful when they happen. And now I can show you how I read trend and price structure using the Bollinger Bands. And it's a very simple approach. So let's start here. You can see that we were in this downtrend, and then suddenly price reversed into the other side. And during this downtrend, you can see that we first started very strong. Price was very close to the outer Bollinger Bands here, and then suddenly the trend leveled off. It lost a bit of strength. You can see that price started to pull away a bit from the Bollinger Bands, and then here more and more there was more and more space between price and the Bollinger Bands. And this means that since the Bollinger Bands measure volatility and momentum, if price is very close to the outer Bollinger Bands, it means that price and the trend is strong. And then once price moves away from the Bollinger Bands, it can signal that the trend is losing strength and losing momentum. And then you can see here, price moves further and further away from the Bollinger Bands. And then here even you can see that the Bollinger Bands are contracting and they are coming closer to each other, whereas here they were very wide. Here they were very close together, and this is then also a very common signal at the end of a trend. First, you can see that price is pulling away from the Bollinger Band, and then here when the channels is coming closer together, this is often signaling the end of a trend. And then what happens here is very classic. You can see here that you have a lot of wicks to the downside, and when this happened, this probably looked like a fake breakout or a possible breakout, because price was always trying to push lower, lower and lower, but it got rejected 1, 2, 3, 4 and 5 times. And even here we poked through this Bollinger Bands. If we use a trend line, we can see that this was a double bottom with a fake breakout attempt. So this is two signals in one. First, it's the Bollinger Band squeeze with the Bollinger Band spike. And then also here the fake breakout below this double bottom. And then what happens afterwards, you can see that price is then accelerating to the upside. You can see larger green bars. And then here finally we are breaking above this 20 SMA, which is the moving average that we get from the Bollinger Bands. It's a very good and a very reliable indicator for this type of trading. And then you can see once price breaks above this moving average, then we are starting this new rally. And now this has caught my attention again, since price is again leveling off, moving away from the Bollinger Bands, and it shows that the trend is possibly losing momentum and losing strength. So this is something that I will be watching to see if price can find more sellers and then potentially move lower. Or what often happens, as I show you, is that you first get the fake breakout and then followed by a reversal. This is also a very likely scenario here on the current price action. And this is a very common pattern that you can see over and over again. You can see here, first we were in the strong uptrend. Then we had this double or triple top even here at the level here. Then you can see here the Bollinger Bands, they move very close together. And then suddenly price found a lot of selling momentum here in this large red bar. This was even an engulfing bearish bar, and then it started this sell-off. And you can find this pattern over and over again. You can see here US dollar Canadian for our chart, the same Bollinger Band settings. Price was in this uptrend. We stayed above this 20 SMA very nicely all the time. And then here suddenly price pulled away from the outer Bollinger Bands first. And then here the very classic, we take this off. The very classic fake breakout and the spike. Price did not make it to the outer Bollinger Bands, but you can see that we faked through the previous highs. This created a lot of liquidity and a lot of stops were triggered here above the highs, and then we sold off into the other opposite direction very strongly, and now we are creating this new downtrend. And even if we look back, then we can see this pattern over and over again. Here we were in this downtrend very close to the outer Bollinger Bands. Then price started to pull away from the outer bands. Here we formed this double bottom again. If we draw the trend line, that it becomes obvious. We did not fake it and broke through this outer Bollinger Bands, but you can see clearly that we made this attempt at the lows and then quickly reversed, and then we started this rally to the upside while the Bollinger Bands were contracting and narrowing again. And then here once more, we were in this downtrend. Price was pulling away from the Bollinger Bands here. Then we see this narrowing of the Bollinger Bands, then the squeeze here with a very nice fake out, and then afterwards this explosive move to the upside. And so I highly recommend that you add the 2.5 Bollinger Bands to your charts, and then once you see that price is in an established trend, you wait until the Bollinger Bands are contracting and coming together closer. Price is pulling away from the outer Bollinger Bands, and then the final entry signal is then when you see the squeeze and the fake of either the previous top or the Bollinger Bands, and better still if you have both coming together, then you can often get very nice trading opportunities into the other opposite direction once price breaks this 20 SMA and then starts a new trend. So this is a very simple pattern that you can see over and over again. And if you have any questions, just leave a comment below. If you like the video, give me a thumbs up on YouTube or leave a comment in the description below. Thank you and have a good trading day.